Welcome back, friends. So today is part 2 of our crypto mining series. Today we're going to talk about what types of entities can mine and actually make money doing that. So there are 4 different major entity types, okay? And actually any of the 4 can mine. So today we're going to talk about what all 4 of those entity types are and how they report their income for tax purposes. So the first type and the most popular type we see are individuals. So these are people who are mining under their own social security number. Maybe they've set up an LLC, so they're what's called a single member LLC. They may even have their own tax ID number for the business. But if you're one person and unless you've elected to be a corporation, then you're going to default to being to this first group. So you're what we call sole proprietor or single member LLC. So this group, you guys, is going to report their crypto mining income on Schedule C of their 1040. Basically, it's just business income. Okay, you've started a business mining, and so that's where you get to report your income. And you also, if it's a business, get to report all of your expenses as well. So not only do you get to expense the equipment that you needed to buy to mine, but you also will get to take a portion of your home office deduction if you're working out of the home, which most of our clients are. So I'm guessing most of you guys are too. When it's reported on your Schedule C, you guys, it's also, in addition to being just ordinary income to you and being subject to your income tax bracket, you're also subject to what's called self-employment tax. So for those of you that aren't familiar with what self-employment tax is, so when you are a W-2 employee, you have payroll tax, right? You have FICA, Medicare, Social Security. And when you're a W-2 employee, your employer pays half and you have half deducted from your paycheck. The total being about 16% of your total gross wages. Well, when you're self-employed, the government still wants their money. So that they have what's called self-employment tax. And when you're self-employed, you're responsible for the whole 16% of that self-employment tax. So not only are you going to pay your individual income tax rate on that income, you're also going to pay this additional 16%, you guys. So really important to think about when you're tax planning and trying to make estimated tax payments on your income. So that's the first type, individuals, sole props, single member LLCs. The next type is a partnership. And anytime there's more than 2 people, more than one person, so 2 or more people who start a business, you're going to default to a partnership. Okay? So an individual defaults to that top one, that sole proprietorship. And if you're in a partnership, meaning 2 or more of you started this business, then you're going to default to a partnership. So in a partnership, all of your income is reported on a separate tax return aside from your individual return, and it's called a 1065. So your business, your partnership is gonna prepare a 1065 tax return and report all of their income and again all of their expenses related to the crypto mining. And then that partnership return generates a K1, which is a tax form that then is given to you as the partner in the partnership, and you report your portion of the partnership income on your personal return. So if you're a 50% partnership in a business that made $100,000, your K1 is going to report $50,000 in income. All right, you with me? And just like our sole prop, our first example, these partnerships are also subject to self-employment tax, that's 16%. So our third type of entity that can mine this is called the S corporation. And so an S corporation, you guys, what this entity type, it's tax purposes only. Okay, you can be a sole proprietor or a single member LLC or a partnership taxed as an S corp. And what's special about the SCorp, so there's another separate tax return just like in a partnership, and this return is called an 1120S. And this separate tax return is going to report all of your income and all of your expenses related to your business, which is your crypto mining, right? And just like a partnership, your SCorp is going to generate a K1 to you as they're called shareholders in an SCorp. So you're going to get a K1 just like in a partnership, and you're going to report your allocated portion of the income on your individual return. The cool thing, one of the many cool things about an SCorp, okay? So an SCorp is not subject to self-employment tax. Okay, so your business income is not subject to that self-employment tax, that 16%. However, not as a way around that, but in lieu of that, an SCorp is required to issue anyone working in the business a W-2. You have to be on payroll and take a reasonable salary. So if you are a shareholder in an S corporation, you have to take what the IRS deems a reasonable salary. So you are still going to pay some payroll tax, which is like the equivalent of self-employment tax, but it's going to, hopefully, depending on how much you're making in your business, it's only going to be a fraction of all the income you're making. So you're saving some money on taxes there. And then the last entity type, business entity type that can mine and make money is a C corporation. And this is just a plain old corporation. So this, unlike all the other, so if you notice all the other entity types we talked about today, all the income is eventually reported on your personal return, right? Even if there's a different report to report it, or a different tax return to report it, it all eventually flows to your personal tax return. But in a C corporation is a completely different entity. Okay, so here, all of your business income from mining is going to be reported on an 1120 tax return. And there's a flat corporate tax rate of 21%. So all of the income on that corporation is going to be taxed at 21%. The caveat to this, you guys, though, is that if you, as a shareholder in the corporation, want to take any money out, you have to take it out as a dividend. And so that dividend is going to be subject on your personal return to some capital gains tax. So if you've ever heard the term double taxation, this is where it comes from. Because the business is taxed at their 21% income tax rate, right? But then if they decide to pay you a dividend out, you as a shareholder are going to pay 15% on that money that you receive. So again, any entity type can mine, and it's just like any other business, you guys. Any entity type can mine. However, picking which entity type is best for you is going to differ based on each taxpayer's individual picture, okay? So if you're not sure if something here sounded good, maybe you're set up as a sole proprietor, but maybe the S Corp sounded like it might intrigue you, meet with a tax advisor and talk about your options. And as you guys hopefully know by now, Lipa Beers and Associates, that's my firm. We're crypto tax experts, and we specialize in business tax returns, you guys. Crypto tax, business tax. If you're a miner, you should be our client. But in case you're not sure, we do offer free consultations. So go ahead and schedule a free consultation and chat with us and see if we're a good fit to work with each other. All right, have a good one, you guys.